Greetings, everyone. Thank you for visiting our channel, A Survivor's Guide to Modern Credit. We want to talk today about credit reports, and more specifically, how to read and interpret a credit report. Now, we come across a lot of people, our clients, who have no idea what their credit report looks like, let alone how to read and interpret one. So what we tell a lot of our clients is you want to make sure that you pull your credit report every 3 to 6 months or so. Okay, that is if you're actively engaged in the business of applying for and receiving credit cards, credit loans, lines of credit, anything along that line. You want to make sure that you're pulling your credit report at least twice a year, at the very least. Okay. And the reason for that is if you're involved in a lot of transactions and you're borrowing a lot of credit, you want to make sure that they're reporting accurately, okay? Because they do make a lot of mistakes. These companies are not infallible. They do make a lot of mistakes, okay? So part of understanding credit repair is just knowing that simple fact that they do make a lot of mistakes, and if you catch those mistakes, a lot of times you can save yourself not only credit reporting points, but a lot of grief and headache. Okay. So first, we're going to talk about really briefly the 3 different reporting agencies. This may be common knowledge for some people, but maybe some people don't know this, that there's 3 separate reporting agencies: TransUnion, Equifax, and Experian. Okay. Now, these 3 reporting agencies say that they don't share information between each other. So they say that they're independent agencies, and the creditors have a responsibility to report accurate information to all 3 of these bureaus, or at least one of these bureaus. Okay, so what you're going to want to deal with is you're going to want to get a credit report from TransUnion, Equifax, or Experian, or all 3. All right, preferably all 3. So you will need a tri-bureau credit report from all 3 agencies. All right, it's most important to have all 3 because, like I said earlier, sometimes you'll find creditors that will only report to Experian and Equifax, but they won't report to TransUnion, right? Or let's say they only report to TransUnion, but they don't report to Equifax or Experian. So you want to make sure that you have all 3 to get a positive idea of what your current disposition is, okay? And you best believe when you go to get a mortgage, or you get a car, or anything else, and these lenders pull your credit report, they're not just pulling one report. They're usually going to pull a tri-bureau report, okay? So why not see the same report that the creditors see when they do a risk assessment on you, okay? So you do have a right to 1 free credit report per year. I know there's a lot of stuff on the internet talking about, free credit reports and this and that, but this particular website right here is actually the only website that I know of that you can get a free credit report with no strings attached. You don't have to put in a credit card number or anything like that. You're only entitled to 1 per year. All right, this is mandated by the government. So if you go to annualcreditreport.com and you put in your state and you put in all your information, you'll be able to go ahead and pull one of these credit reports. Now, these ones are pretty finicky. You have to make sure that you put in the right information. It does go through a set of security questions that if you answer them incorrectly, you will not be able to pull a report online. You'll have to write them and have them pull a report for you. So, but for those who just want to pull a credit report and they don't want to pay the money, go right here. You can get it, no problem. Okay. But for a lot of our clients, we need more than just 1 credit report a year because, like I said, if you're actively involved in the application and process of financing debt, then you want to be checking your credit report more than once a year. Okay. So if you're not going to go to annual credit report, you can use a credit check total or creditreport.com. By far, this is not the only bureaus that exist out here. These are some of the ones that we choose to use because they're pretty simple, pretty easy for our clients and for us. So we like these particular ones, but do some research, find out which ones work best for you. Credit Check Total or CreditReport.com, both of them offer free trials. Okay, so what that means is you can pull your credit report under a free trial and then cancel the subscription maybe 3 or 4 days later. You'll get your 3 bureau credit report, but you may only pay like $1 or $7 or something like that. Okay, so if you want to just get it quickly and not have to get a reoccurring charge, you can do it that way. Okay, otherwise, both of these agencies will pull a tri-bureau report for you. Okay. One other thing to remember is not all credit scores are the same. Okay, so let's say you go to Credit Check Total and you pull a credit report for Credit Check Total and you look at your FICO score, and then you go to, let's say, Experian, or rather Equifax. If you go to Equifax and you pull a credit report and a FICO score for yourself under Equifax, you may have two different FICO scores. Okay, the reason is because scoring models vary. We all know, and we're all very familiar with FICO. Okay, um, and FICO, incidentally, FICO is used by 90% of lenders, particularly mortgage companies. They use FICO. But when you start getting into these services that provide credit reports like Credit Check Total and others, they use different types of scoring models, mainly because they don't want to purchase the rights to use FICO. I guess it must be pretty expensive. I don't really know. But some of the other ones that are pretty popular is the Vantage score. So you might see that out, and you have to remember that when you pull your credit report on Credit Check Total or on creditreport.com, and then you go to your mortgage lender or you go to the guy who's going to finance your car, they may not have the same FICO score that you remember seeing from your own credit report that you pulled. Okay, so remember that's pretty important. Now, also you'll have industry specific scoring. Like I said, there's a mortgage lender score that's going to be a little bit different than a Credit Check Total score, for instance. Okay, the mortgage lender scores, they have specific criteria that they're looking for, and their scoring model is going to be based on that criteria that they're looking for. Okay, the same thing with auto loan companies. Their scoring model may be a little bit different, so be careful with that. So it sounds confusing, okay, but as long as you have a rough estimate as to what your scoring is, you can always go and apply for something. If you get denied, they have a right to give you your credit score and tell you why you got denied. Okay. So I wanted to touch on a survivor's guide to modern credit. That's our downloadable e-course. A lot of the things that we're going to cover today is going to be in the guide, but in much greater detail. Okay, so if you want to learn how to do credit sweeps, if you want to learn how to repair your credit, if you want to learn how to interpret and read a credit report and a little bit more in depth in this video, you can go ahead and go to guidetomoderncredit.com/download now, and you can go ahead and download the guide. Okay, and it's going to have everything that you need in order to accomplish what it is you want to accomplish. Okay, so first I want to cover, I have a sample here of a credit report. Now this is an actual credit report. Okay, this is one of our clients' credit report. We've, of course, redacted out all the information, the personal and private information, but we're just going to kind of go through this, and I'm going to kind of give you an idea as to how I interpret a credit report when I pull one up. Okay, so the credit report itself is broken down into sections. All right, and this is pretty common across the board. All right, so you're going to always have your personal information identified, as well as the summary. It's going to go into your public record, okay? Then also into your credit inquiries, all right? So the meat of your report doesn't really start until down here, okay? But most of this information is very vital. This information up top, this is very vital. It's important to understand. But as far as the actual trade lines, they won't start till about here. And then you have your credit score, okay? So let's go through this. Personal information, really simple. Your name, any AKAs, anything you've been known as, will go here. What date you were born, your addresses, your known addresses, will go here, and current employers and previous employers. So I want to touch on this really briefly. One thing that should be understood with your personal information and profile is you can't necessarily change this information directly. Meaning, you can't call up Experian, Equifax, and TransUnion and change your personal information. This information is reported directly from the creditors that you do business with. Okay, so let's say you got married this year, right? And your name changed legally. I had clients who've come to me and they've asked me, well, I need to change, I need to update my credit report and things like that. You don't have to send your court documents or any of your name change documents to the reporting agencies. If you do, they're going to tell you we can't do anything with it. Okay, what you're going to need to do is update the information with your creditors who are reporting information to your credit report. So you would call your credit card companies, you would call your mortgage company, you would call the place that's financing your vehicle, okay? And you would give them the necessary information to change your account to reflect your new identity, all right? And when that reporting information goes out, either that month or the month after, it will reflect on all three of your credit bureaus, okay? So that's what you want to do if you have any problems with changing your personal information. Really easy, really simple. Just go to your creditors and show them your new documents and have them change it, okay? If you know, a lot of times they just ask for maybe the name change document from the court or a copy of your driver's license that says your name or something like that, okay? Addresses. Now, the addresses are really important too. They stay with you for a while, okay? So addresses are the addresses that are connected to the applications that you've submitted, okay, and you've gotten lines of credit for, all right? Now, there's kind of a theory out there that says that lenders have a preference or tolerance to give you more credit or less credit depending on your zip code. Meaning your zip code is relative to the demographic of the particular area. And they can base risk analysis off of your demographic. They actually, they call it an HMA, which is a high minority area. So you can look this up. It's very interesting research. But the theory goes that in these particular zip codes, if you took two people who had the same exact credit profile, the same exact FICO score, right? And you take the zip code, and the only thing that's different is the actual zip code. If one lives in a more affluent area, which has a better risk analysis based on the median income in that area and other factors, and the other person has a zip code that denotes to an area which is much higher risk based on the median income in that area, the person with the better zip code, per se, is going to get either more credit, right, or get approved where that other person might get denied, okay? So if this theory is holding true, it'd be prudent of someone who's interested in getting bigger lines of credit to be very mindful what zip codes you use in the course of doing business. All right, that's all I'm going to say on that particular part. and hopefully those who have creative minds can take that information and bring it to the next step. Okay. Current employer, previous employer, that's pretty obvious. Anyone that you've put on an application and that you worked for is going to be here. Okay. Personal statement. If you have any issues with your credit report that have yet to be unresolved, you can actually put a personal statement here of the issues, and you can write that here, and all your creditors will be able to see that. Okay. So here you have a report summary. Really quick, just going through this. This is going to tell you a snapshot of your credit analysis. All right, your real estate, your revolving debt, your installment debt, other accounts, and collections. Okay, so let's take a look. This profile is pretty bare. Okay, this particular individual has only about $5,000 in revolving debt. I'd say that's probably credit cards, and only about $146 in collections, $234 up here. Maybe I can highlight this so you guys can see it. No, I can't highlight it that much. All right, but if you see in the other category, $234, in the collections, $146, and in revolving debt, $5,325. So without going into any further into the account, we can see that this particular person is a little bit under $6,000 in debt. Okay, not too bad. So let's go into bankruptcies and judgments. Okay, now we've got some tax liens on here. All right, now in terms of public record, your public record derogatories are probably the worst type of derogatories you want to have. Okay, tax liens should be addressed and resolved as soon as possible, because this is going to hinder you the most in terms of getting new lines of credit or anything along those lines. Okay, so here you have the date that the tax lien was filed, the reference number that can be searched in the public record, the particular authority that is allowing the search. So this is usually the county where the lien is filed in. Okay, the liability amount and the assessed amount. So basically, this person owes $2,589. Okay, and it's been filed in the recorder of deeds, and it's registered as a state tax lien. Okay, so we see that. Okay, the other thing with tax liens, this is why they're so critical, is because even when you get a state tax lien released, as you see in this person's situation, okay, it's still going to stay on your credit report. All right, it's still going to stay on your credit report for 7 to 10 years. Okay, so that's a problem. The reason why that's a problem is because even if you get it paid, there's still evidence that it was existed in the first place, and the fact that it's still there indirectly inhibits your score. Okay, so you want to try to avoid getting these if you can. For a lot of times, it's after the fact when the client comes to us. So we do have some success with these in terms of credit repair. Excuse me. We do have some success in terms of credit repair with these, but once again, they're not easy to deal with. Okay, so if you're looking to try to get some property, if you're looking to try to make a big purchase of something, you want to deal with these first. Okay, let's keep going here. Okay, so pretty easy to read though. As you can see, it tells you what it is. It tells you the date it was filed. It tells you how to look it up. It tells you where it's filed, and it tells you the amount and who it's against. The plaintiff would be the person who filed it. Okay, so let's say let's say a client got sued, all right, by a third party. That third party would be here, okay, under plaintiff. All right, pretty simple. So we're going to go down to credit inquiries. That's next. Okay, so here you have credit inquiries. Now, inquiries are when you go into a bank or a financial institution to apply for credit, they're always going to pull a credit report for you. And they may only pull one, or they may pull all three. Okay? But nonetheless, they're going to pull a credit report to assess your risk, and that is going to be reported on your credit as a credit inquiry. They're not inherently bad, all right, but you don't want to have a whole lot of inquiries on your report, all right. Here, this person has an American Express inquiry here, business name Amex, inquiry date 9/23/2014, business type bank credit card. Real simple. Now you can see here that they did not. I'm going to scroll down just to check. Still credit inquiries. Okay, going back to American Express, you notice that there's no information for Equifax or TransUnion. So this tells me that American Express did an inquiry on September 23rd, 2014, and they pulled an Experian report for this particular client to see what the client's credit worthiness was. They didn't do an Equifax, they didn't do a TransUnion. So Amex shows me that they only pull Experian. Okay, here's a different one, Discover Financial, where you now have 3 credit reports that were pulled on that same day. Okay, and in fact, it was the same day as the American Express. So you can see that this person did a lot of inquiries. All right, on that same day. Maybe they were looking for some credit. They obviously were, right? They obviously were looking to get some major lines of credit here. So 9/23/2014, we have American Express, we have Discover, we have Bank of America, we have Capital One, we have a Chase card, we have a CBNA, we have another CBNA, we have a Capital One, okay. And wow, we have Bank of America. This one is a couple of months later. So really, we have all of these inquiries were done on the same day. Okay, that in itself is not going to be really good. I'm going to tell you why. Because you really don't want to have more than about 3 inquiries a year. Once you start having 6 or 7 inquiries on your credit report within the same year, it really starts diminishing your score. Okay, I don't quote me on this, but I believe after about 3 inquiries, your score goes down about 3 points for every other inquiry. Okay, that's a rough estimate. But in this particular case, this client was obviously shopping, looking for different lines of credit. A couple of months after the fact, it looks like. Okay, even a few months before that, rather, because you see here, Capital One was 6/25/2014, and CBNA was 9/23. So a few months before the fact, he or she did several more inquiries. Okay, so they've been busy. So this would be a client that we would advise to help allow us to work on some of these credit inquiries here. These may have been some that he might not have been aware of. Maybe this might have been an identity theft issue, okay, where if you look and you see that they were all done on the same day, maybe that was an issue where a person got a hold of the client's information and just started running it. Okay, that could very well be. All right, that would only be decided within a consultation for the client. But just to give you guys a plausible idea as to why something like that would happen. All right. So here we have the meat of the report. Okay, we're almost done here. Okay, credit cards, loans, and other debts. So this is where most of your information is going to be. Anytime you're going to be preparing disputes on behalf of someone or doing your own disputes, you want to go to this information because this is where you're going to get all the information you need in order to complete your dispute. Okay, so here we have an example here of Capital One Bank. All right, account name Capital One. All right, here's the account number. Usually you're going to get an X'd out, all right, for privacy reasons. Okay, it tells you that the account type is a credit card. All right, so this is that revolving debt that we seen earlier in the bank summary, in the basic summary rather. All right, the balance is $5,091. It's been past due $5,091. It was opened in September 1st, 2014. Right now, the account status is closed. So that means is that the creditor probably closed it for past due issue. All right, monthly payment is zero. Payment status, it says that it's charged off. So what is a charge off? A charge off is when the account goes unpaid for longer than 90 days. Usually it takes 90 days to initiate a charge off. Okay, at that point, once the charge off is initiated, the creditor is free to sell the debt to a third party or to hire a third party collection agency on behalf of the creditor in order to collect the debt. Okay. So you want to avoid charge-offs as well, because once you get a charge-off on an account, they ding pretty negatively on the credit report. All right, so you want to try to avoid that as much as possible. Okay. So high balance. So this tells you what the balance would have been, the highest balance has ever been, rather, I should say. This says zero, but it's obvious that the balance was at least $5,091 because that's what it's past due. So sometimes you'll see mistakes like that. But normally this would say what the balance has been in the past, the highest the balance has been in the past. This will tell you the limit of the actual credit card, and this will tell you if it's revolving debt. Okay, revolving debt is debt that you pay every month. Okay, like a credit card, right? You pay it down and then you get some more credit lines and you work it back up again, and then you pay it down and you work it back up again. That's a revolving debt. An installment debt is like a car loan, right? Where you're actually paying it down and you continue to pay it down until it's done. All right. And it may be a 48-month term or a 60-month term or something like that. But once you're done making your payments at the end of your term, you're done. Revolving debts can keep going on ad infinitum for as long as you want to continue to pay it. Okay. Until you close the account down or the creditor closes it down for you. So this is telling me here that this Capital One Bank is charged off. It gives me the telephone number here to the creditor, and it also is giving me the address to the creditor. So if I wanted to write the creditor in order to dispute the account, I could do that right here. Okay. It's giving me a 24-month payment history. Sometimes you're going to have to find out what the key is in order to find out what these mean. But very simply, this means that there was a positive payment in October, a positive payment in November, but in December we went 30 days late, in January 60 days late, in February 90 days late, in March 120. So after 120 days was when they actually charged the account off. So pardon me, I said 90 earlier. Capital One goes by 120 days. So after 4 months of non-payment, the account gets charged off, and that's where you see the CO here, stands for charge off. ND means no data, means that there was no information there. Okay, a lot of times you can dispute these NDs. All right, if you have a whole series of NDs, but you know you've been making payments, dispute those, right? Because that's going to increase your credit score by having those positive payments replace those spaces of no data. Okay, so that's how it works really simply. I'm going to show you one more credit report because this one will look a little bit differently. All right, but I want you to see that it's not much different. Okay, here's another credit report here. All right. I've blacked out the information, okay? But if you look at this particular credit report, it's set up very similar, all right? But it's actually a different provider that this credit report is coming from. But once again, it's broken up into sections. You've got your personal information. You've got your credit summary here, okay? You've got your credit inquiries. All right, now this particular client even went and got more inquiries than the last client. If you see, I believe when we counted these up, there were 22 inquiries in 1 year for this particular client. So, we had to tell them, okay, you guys got to take it easy. All right. But, we have their account history, and it works just the same. Account number, account name, account number, account type. Okay, this is an installment account, so this is telling you that this might have been some type of secured loan, right? Maybe against a car or something like that. All right, it's for $7,000. Okay, so this could have been something like a car note, all right, that he got from Bank Liberty. Okay. Here we have a 24-month payment history, but this is pretty blank. All right, so it's showing that the only payment that was made, it looks like, was in December of 2013. That's probably inaccurate, but those are the type of things that we would dispute if we needed to. Okay, so once again, account name, account number, account type. It tells the status as open. All right, monthly payment, the date that it was opened, the balance, whether it's revolving or installment debt, what the highest balance has ever been, and what the limit was. So we know that at one point, this particular client went over their limit of $200. They went $34 over their limit. Okay, no big deal. Okay, but remember, all of this stuff is recorded. Okay, and when that's recorded, other creditors can look at that and see, well, that may pose a potential risk for another creditor, right? Because they'll see at one point the client went over and above the limit itself, but he was able to pay it all down, okay, and get it back to where it was at that point, which was $133. All right, so that's how you read a credit report, essentially. Okay. One of the things that you have to also take into account is, of course, your credit score. Okay. So this is an example of this particular client's credit score at a 619. All right. That's pretty average, really, I'd say. Then most people are between a 620 and a 680. Okay. That's about there. That's on the low side of the average, but we can work with that. I've seen a lot worse, but 619 is good. A lot of the current mortgage loans like FHA starts at 640. So at a 640, we're not too far away. If we made some small changes, some small adjustments with this particular credit report, then we can certainly increase that and get that up to a 640. So keep in mind what we talked about earlier. Not all credit scores are the same. This is a credit expert score. So you see the little trademark behind it. It's showing you that this is a different type of scoring model that this company decides to use. It's called credit expert score. So it's not a FICO score. It's not a Vantage score. It's a credit expert score. So it's going to be different across the board. All right, but it should be in the range. Okay. So I think that's all we're going to cover today, but we want to make sure that we go ahead and take a look at our Survivor's Guide to Modern Credit. It's a downloadable e-course, okay, that's going to have all the resources that you need to survive the financial age of Big Brother, okay? You'll have ebooks, web publications, resource links, form letters, templates, audio, video. It's a virtual library for you in order to understand how to navigate through this system of commerce and finance. So you want primary trade lines. If you want to get yourself out of check system so you can open up a bank account, do you need an 80 paydex score for your business? Do you want to build your business credit? Do you need funding for your business? Go ahead and download the Survivor's Guide to Modern Credit. It's going to have everything you need to get rolling, to get started, and to turn your empire into a multi-million dollar empire. You can start small and build up. So that's what we've got to get to. And the Survivor's Guide to Modern Credit shows you how to do that. Make sure you go ahead and download that. And once again, we appreciate you checking out our channel, Survivor's Guide to Modern Credit. We're going to have updates almost every week. So make sure you tune in and check it out.